Hello there. Welcome to Financial Accounting N5. Today we want to look at a question paper of November 2022. So on that question paper, we are going to look at question 2, whereby we are going to prepare the statement of profit or loss and other comprehensive income. So we can go to our question and see what we have in terms of our question. This is our question 2. This is our question 2. And it reads, the pre-adjustment trial balance and the additional information were taken from the books of Zama Zulu Wholesaler, a partnership formed by K Zama and L Zulu. Pre-adjustment trial balance is at 30 March 2020. So this is the trial balance that you are given with the two columns, debit side and credit side. And if you go down, we have got some information that we are given beneath this trial balance. There we have got additional information that we have there. And then we go to the next page. Also, we have got additional information that is there on the next page. And then on the required part, we are only going to be concerned about the first part for this video. We are going to just look at 2.1 as for this video. And 2.1 reads, draw up the statement of profit or loss and other comprehensive income. And if you check on the number of marks there, we have got 30 marks there that we have there. So this is what we have in terms of the first part of this question that we want to look at in this balance in this video. So we have got our statement of profit and loss that we have prepared there that we would want to fill in. This is the statement of profit and loss and other comprehensive income for Zama Zulu. So on this statement of profit and loss, we are going to start with the sales. Remember, the sales is the one that we start with. And on the sales, we're going to put the net sales figure in this column. The net sales figure in the sense that we are going to subtract. We have got some data allowances that are there. They are going to reduce the sales figure. Or if we have got the returns inwards that are there, or sales returns, they are going to reduce the sales figure. Remember, sales returns, data allowance, returns inwards, they all mean the same thing. They are goods that we sold and they were retained for many reasons. It might be they were substandard, they were damaged, etc. So this is what we have in terms of our sales. So we can go to our question and check the figure for sales and check if there are any returns in terms of any allowances. Then we can go back to the question. Right, we can go to the trial balance and check what we have. This is our trial balance. So you'd see that in our trial balance, we can go down to check the figure for sales that we are given there. So if you come here, you see that we have got sales there. The figure for sales is here. It's 2,503,100. This is what we have in terms of sales. Then we can check now if you've got any sales returns. You see that there are sales returns that are there here, 3,000. So we are going to say 2,503,100. Then we subtract our 3,000 so that we remain with the net sales figure. Then we put that net sales figure in that statement. So we go back to that statement. So here now we can just summarize that and say we have got 2,503,100. And then we subtract the sales returns, which is 3,000. And then the figure that we get there, if you subtract, you put it in this column, which is at 2,500,100. So this is what we have in terms of the sales. Then we now go to less cost of sales. So we are just supposed to know this format in terms of the layout that we are present in the statement of profit or loss. Then we have got our cost of sales here, less cost of sales. Then we go again in the question and try to see what figure for cost of sales are we given in the sale balance. If you come here, you'll see that cost of sales is here, it's 1,270,000. So this is the figure that we are just going to put there, 1,270,000. So here now we've got 1,270,000. So here, this is what we have. And here we are saying less. So it means here we are subtracting. You can show by putting brackets that you are subtracting. So when you now say sales minus cost of sales, you get gross profit. So here now we have our gross profit. So our gross profit is going to come in this last column. So we are just going to say 2,500,100 minus 1,270,000. The answer will come here. So when you subtract there, the answer that you get there is 1,230,000 100. So this is what we have. Then from there, you are supposed to add other income. You are supposed to add other income. So on other income, we are going to list the other incomes that are there. Then we are going to add the other income. The total now will come in line with this description of other income, and then will come in this column there. And this other income we are saying we are adding, so we add it to gross profit there to get the figure for gross income for the year that is going to come below the list of other income. So here now, we are now going to the trial balance and check the incomes that we have in the trial balance. So if you come here, you'd see that let's just check what we have in terms of other income. Let's just go down to check what we have in terms of other income. You can just incomes usual incomes, they do have credit balances, so you can check incomes on the credit side. So remember, this is the credit side and this is the debit side, so incomes will be on the credit side. So here, if you come here, you've got settlement discount received. This is an income. Settlement discounts are received. So you've got 16,900. You can go and put that one under other income. Right here, we've got a settlement discount received. Right, the figure for settlement discount received 16,900, and you're going to put it in this column, 16,900. So we can go again to check what other income do we have in the question. Right, we have rent income here, 90,000, but we are not going to take this 90,000 as it is. We check in the additional information if we've got anything that has to do with incomes. So what you are supposed to do is when you are dealing with incomes and expenses, you go and check the figure that you are given in the trial balance, but you don't have to take that figure straight away. You go to the additional information and check if there's any adjustment according to that figure. If there's no adjustment according to that figure, you just take the figure as it is from the trial balance to the statement of profit and loss. But if there are adjustments, you have to first make the adjustments, and then the figure after adjustments is the one that is supposed to be put in the statement of profit and loss. So in this case, we've got rent income, which is 90,000. Then we go to additional information now to check if we've got anything that is explaining about rent income. So if you come here on the second point, the monthly rent for January, February, and March have not yet been received. So we have got 3 months that have not yet been received, and we know that in a year we have got 12 months. So if you say 12 minus these 3 that have not yet been received, you get 9. So what it means is the figure that we are given there for rent income, which is 90,000 a year, is representing 9 months. And when we are preparing the statement of profit and loss, we prepare it according to the accrual basis or the matching concept. In that, we are saying what belongs to this year should be recorded this year, and what doesn't belong to this year should be not recorded this year. What belongs to next year should be recorded next year. So what does it mean? It means the only income that one has received is 90,000, but it's only for 9 months. So we want income for 12 months. So how can we calculate so that we get the income for 12 months? What we are going to do is we are going to calculate the monthly income, because remember, 90,000 is representing 9 months. So for 1 month, we are saying now 90,000 divided by 9, so that we get the monthly income that was received. So it means on a monthly basis, they were receiving 10,000. Most say 9 into 90,000, you are going to get your 10,000. So this 10,000 is per month. Then when you want now to present it in the form of now a year, we are now saying 10,000 times 4, then you get the yearly or the annual income that was supposed to be received. So we are just going to say 10,000 times 12, then you get the one that was supposed to be received for the whole year. So we go there. So we are here now. We are saying we have got rent income. And the income that we are given there is, we are saying is 10,000 per month. So we say 10,000 times 12. So the other thing that you should take note is that all the workings, you should just show them in brackets. The final working that is making you arrive at the answer is the one that you can just supposed to summarize in brackets. Like here, 10,000 times 12 will make us arrive at the final answer, which is when you multiply these two, we are going to get 120,000, and then we are going to put our 120,000 in this column. Right, we go down now to present other incomes that we have. Right, we can check again if you have got other incomes. Right, you can check in the trial balance. That's where you can give a hint in terms of those incomes. Remember, we were at we've got rent income, we've got settlement discount, we've entered them. If you go up there, you'll see that there's no other income that is there. So in that case, if you see that in the trial balance, there's no other income that is there, you now check in additional information. There might be something that is mentioned there about any income. If you look at the first point, we do not have a description of an income. It's about interest there, which is a finance cost. We go there to the next page. You go down, you've got declared this is bad debts, it's going to be an expense. You go down to check. Then you come here now on physical inventory taking. We are going to have either an expense or an income. When you've got a surplus, it means it's going to be under income. When it's a deficit, it's going to be under expenses. So how are we going to calculate that? You are going to say the figure that you get for physical. Here you are saying the physical figure, the physical stock count figure, minus the book value figure there. So when you calculate that, it says that you get a surplus. When it's positive, when you get a positive figure, when the physical is greater than the book value, it's going to be a surplus. But when you get a negative figure, it's going to be a deficit. So what does it mean? It means that when the physical is greater than book value, it means what we counted on ground, which is practically on ground, is more than what is on the book value. So it's a surplus. But if we count a figure that is less than what is on the book value, it becomes a deficit. So this is the hint that I can give that can make it easier for you to determine whether it's surplus or deficit. So in this case, we are told that physical inventory taking reviewed that inventory to the value of 177,400 and stationery to the value of 500 rands. We are not on the end. So we are not concerned about stationery. Stationery is its own description in the trial balance. We are only concerned about this figure, which is 177,500. So this one is the physical. So we are going to say 177,400. Then we subtract the book value. The book value is the one that you are given in the list of balances there. So we can go back to check what we have there in the list of in the trial balance. Right, we can check the figure that we are having there. If you come here, you would see that we have got inventory here, 170,500. We can come here, that's where the figure is, 100. Sorry, it's not that one. It's here for inventory. We are having it here, 170,500. So this is the one that we are going to compare the physical stock figure, 170,500. So you are saying minus 170,500. So the answer that you are supposed to get there will determine. So if you look at the figure that we are having, we are seeing that the physical figure is greater than the book value figure. So it means it's a positive answer that you are going to get there, which is a surplus. So it's going to be under other income. So we can just go and summarize that working and put the answer that we have there. So we go to the answer section. We are now here. We are now saying this is a trading inventory surplus. Trading inventory surplus. Then in brackets, we just summarize the working. What are we saying? We are saying 177,400. Then we subtract the 170,500. So when you do that there, let's just calculate it correctly there. Use a calculator. You get 6,900. 6,900. So this is what we have. So this marks the end. If you go there in the question, you can go there in the question and check again. From the information that you are having, you go down if there's any other income there. But you'd see that we do not have any other income that we have there. So this marks the end of our other incomes. Then we can add the total there. There now you can say 6,900 plus 120,000 plus 16,900. Then the answer that you get there is supposed to come here in line with other income there. So let's calculate that. We add there the total that you are supposed to get there is 143,800. 143,800. And you are supposed, since you are saying add here, it means you are supposed to add this figure to this one. So you add this one plus this one, then the answer that you get there is now the gross income for the year. So here the description now is a gross income for the year. And you try to calculate there the answer that you get there. The answer that you get there will come there in line with gross income for the year. So our total there is our total, let's try to see, is 1,373,900. And then beneath that now, that's where now we are going to subtract the expenses. So we are going to say less distribution, administrative, and other expenses. So here we are going to say less distribution, administrative, and other expenses. So this figure is going to come here. This figure is going to come here. So what we are going to do is we are going to list these expenses beneath that heading. We are going to list them beneath here, and then the total will now come in line with this description of distribution, administrative, and other expenses. So we can go again to the question and try to see which expenses do we have. We are going to go down. As we go down, we see them. We start from the trial balance. So if you go down, you'd see that here on nominal account section, that's where we have the expenses there. You go down, you're going to see that they are starting where they are starting. Let's try to see. Let's try to see what we have there in terms of these expenses. So if you check here, you'd see that we have got something about salary here, which is an expense. We have got K-Zama and the Elzul, and we've got 80,000 and 88,000 here. So what does it mean? You don't have to put this figure straight away. You have to check in the additional information, what they are saying about these salaries, and then you record them. So if you go down there, let's go to the next page and see what we have there. So the issue of salaries, let's see where it's being explained there. Right, we are here on point 2 on the partnership agreement. We've got here. They are saying K-Zama is entitled to a salary of 7,000 per month, and El Zulu is entitled to an annual salary of 90,000. So this one is a mistake here. It's supposed to be 9,000. This was a mistake. So here we've got 9,000, then we've got 7,000 per month. So what are we supposed to do? It means this annual salary allowance, this one, is we do not put it in the statement of profit and loss. We do not include it in the statement of profit and loss because it's an annual salary allowance. It's an annual salary allowance. We are supposed to adjust it in the statement of changes in equity. We are supposed to adjust it in the statement of changes in equity. So we are not going to include it in the statement of profit and loss. But this one, which is being paid monthly, this one, we include it in the statement of profit and loss. So the salary only that is going to be in the statement of profit and loss is this one for 7,000, which is per month. The annual one will go to the statement of changes in equity. I think we can get it there. So we are given it per month. Then in the statement of profit and loss, we are recording values per annual basis, that is per yearly. So to get the annual one, we are going to say 7,000. Sorry, here we've got 7,000. We are going to say our 7,000. Then we multiply by 12 months because we've got 12 months in a year. Then the answer that we get now becomes the salary. So we can go there on the other section. And remember, it's for K-Zama. We've got salary. And the salary that we are going to include there is for Zama. Then in brackets, we just show the calculation that we had said 12 times 7,000. 12 times 7,000. And the answer obviously can now come on the in this column. So when you multiply the two, 7,000 times 12, we are going to get 84,000. So you put your 84,000 here. And then beneath that, again, we can go and check what other expenses are we giving there in the trial balance. We come to the trial balance. We are on salary. Now we go to wages. We have wages, which is 640. So we can just go and put it there. Wages 640. 640,000. So here we have our wages. It's an expense again, which comes under this, and we've got 640,000. And then under wages, we go and check again what other expense do we have. Right, under wages, we are here. We have got promotions and advertising, 40,333. So before you are entering these figures, we check in the additional information if there's anything that is affecting this. But in this question, we do not have anything that is affecting wages. And then for promotion and advertising, you can just try to see there what do we have on promotions and advertising. So on promotions and advertising, we do not have any adjustment again. So we're just going to take this figure 40,333 and put it there. 40,333. So here we are now on promotions and advertising. And we are saying the figure that we are having is 40,333. Then we go there to check what other do we have. We can try to see what we have again under promotion and advertising. We've got cell phone, 7,947. They do not have any adjustment. If there's any adjustment that is there, you adjust first and then you put the net figure there. Cell phone, we've got 7,947. Then we have got stationery, which is 87,500. So we come back to stationery. Cell phone is 7,947. We go there. We are now on cell phone expense. Right, we are now on cell phone expenses. And the figure that we have is 7,947. Then from there, we go there again. Right, under cell phone, we have got stationery. Right, stationery, we are given 87,500. What does it mean? It means this stationery represents stationery that was bought for the year. But if you go to the additional information, we are given stationery that remained at the end of the year. So the stationery that was used represents the expense. So what was bought minus what is still there will give us what was used. So we are saying 87,500, then we subtract what was there at the end of the year. we are told DA stationary to the value of 500 were on hand. So we subtract this one 500, then we get what remained. So here we can just go there and summarize this working. Now we are on stationary. So on stationary, what are we saying? We are saying the one that we are given in the trial balance, which is 87,500. Then we subtract what was there at the end of the year, there on the end. Then when you subtract, obviously, they are going to get 87,000. Then we can go and check again, what do we have next? Right, under stationary, we've got postage and stamps. Postage and stamps, 6,460. You'd see that we do not have anything about postage in adjustments under additional information. So we are going to put this figure straight. Then we've got refreshments, 15,000. Then we've got refreshments, 15,000. So we can just go and summarize these ones on the answer section. So here we are saying we have refreshments. We have refreshments. Refreshments, which is 15,000. Refreshments, 15,000. And let's check the other one at the end there. Right, under we also have postage and stamps, which is 6,460. So we have postage and stamps, which is 6,460. So this is what we have there. And then you would see that these are all the expenses that we have. And then when you have finished the expenses that we are having there, you are supposed to also check on the additional information. There are some expenses that will be listed in the additional information that won't be there in the trial balance. For example, the issue of depreciation. The issue of depreciation also, it can be also in the additional information, but it's not mentioned in the statement of profit and loss. So if you come here for the additional information, you'll see that you can go to the next page and try to see what we have. You'd see that we have this one, which is J. Marshall, was declared as a bad debt for 200 rand. So this one represents, this one is also an expense that we are supposed to put there. It's an expense. These are credit losses of 200 that we are supposed to include as an expense again. So we can go there and put that one again of 200 rands, representing our credit losses. So it means here we've got our credit losses, 200 rands. And then we have depreciation. Depreciation obviously is there. Then we go to the question to see now what do we have in terms of depreciation. What do we have in terms of depreciation? So if you come here, you would see that depreciation is here. Is explained here on this section. We are told that the second point is the first point is saying maintenance of vehicle was debited to the account of vehicle 16,200. So what does it mean? This was supposed to be maintenance, but it was debited to the vehicle's account. So it was supposed to remove this figure 16,200 from the vehicle's account and put it as what? As maintenance. So we can just straight away go and put this one maintenance 16,200. It's not there in the trial balance. So we just create it and put it there in the statement of profit and loss, because obviously we are going to create it. So we got 16,200. So for maintenance that we are supposed to put there. So we come back there. So what does it mean? It means that we just have to remove this one, and first of all put the maintenance, then the depreciation will come out. So we've got maintenance. our maintenance, remember, is 16,200. Then we can now put our depreciation, that where we are going to calculate it there. On the depreciation part, we are told that this 16,200, we are supposed to remove it from the figure of vehicles. And then the calculation of vehicles is 15% per annum according to the straight line method. Remember, straight line methods, the formula is percentage times cost, as simple as that. So, but the cost now is not the actual figure, because there's a 16,200, which is inside the cost of vehicles that we have to remove first. Then we say 15% of the net figure that we have got there. So we go there. So we go to our vehicles. Our vehicles, I think it's mentioned there at the beginning of the question. We are here. The cost is here. The cost will be on the debit side, 546,800. So what are we going to do? We are going to say our 15%, which is 0.15 as a decimal. We multiply it by the, we are given 546 as the cost of vehicles, 546,800. Then we subtract the figure that was debited, which was supposed to go to maintenance, which is 16,200. Right, we try to calculate that one. Let's try to see what we have there. So when you say 546,800, then you subtract the 16,200. The answer that you get is 530,600. 530,600. So you're saying 0.15 times 530,600. Then you now say 0.15 times that figure. You are supposed to get 79,590. So here now you've got 79,590. So this is depreciation for vehicles. This is vehicles. So in the other section, we're just going to represent it, the final figure here, which is 79,590. We cannot present the whole working. So we go now and see what we have in terms of the other fixed asset or non-current asset that we are given there. We also have equipment. Equipment, they are saying on equipment, a 10% per annum according to the carrying value method. Take into account that equipment for 32,000 bought during the year was correctly recorded. So what does it mean? We have got equipment that stayed for the whole year and equipment that came along the year. So this one that came along the year on 31 December 2019, it means it stayed there. This is 31 December 2019, and the year is ending March, end of March. So what does it mean? It stayed only January, February, and March, which means it stayed only 3 months. So we are going to calculate the depreciation for this equipment for the whole year. Then we reduce it to 3 months by proportional reducing it. We say times 3/12. Then we get the proportional stay for those 3 months. So this is what we have. So for the calculation of the equipment that was there, there at the beginning of the year, we are going to first of all subtract 32,000 from the costs that were given there, so that we remain with what was there for the whole year. So on the depreciation part now, calculation of the equipment, we come again there and try to see. So here now we are calculating for equipment now. It's now equipment. So for that one, that stayed the whole. So that came along the year. It was 32,000. So we are saying 0.10. It was 10%. You can just cross check the percentage there. The percentage we are given it here is 10%. So 10%, and we reduce it to 3 months. So I will come here. I will say times. Remember, it was we are not getting the actual figure that it was costing 32,000 there. So times 32,000. So times 32,000. And remember, it stayed only 3 months, so you multiply again by 3/12 to get the stay for 3 months. So when you multiply that one correctly, you are going to get 800. So it means for the equipment that came along the year, the depreciation is 800. So for the one that stayed for the whole year, you now want to see the costs and the accumulated depreciation. Remember, this is remember, this is the reducing balance method, diminishing. If you come there, you'd see that description that you are given for the method of calculation of depreciation for equipment. It's mentioned here that it's using the carrying value method, and the formula for carrying value method, we say percentage times the carrying value. Where the carrying value, we get the carrying value by saying the carrying value is equals to cost, the cost minus the accumulated depreciation. So we have to calculate the carrying value first, then you say the percentage times that one. So this one is divided from the straight line method. So we come here, we take note of the cost. We take note of the cost of the equipment. The cost of the equipment is mentioned here, 228,400. But in this equipment, there's an equipment that was bought along the year for 32,000. So we are going to subtract that one. Then we are left with the ones that were there at the beginning of the year. And then the answer that you get, we subtract now the accumulated depreciation of equipment, which is 91,200. So what are we going to do? We are going to say 228,400. 228,400. You subtract the 32,000. So that you get the cost before the cost at the beginning of the year. So we say 228,400, then you subtract 32,000. Then you get your 196,400. 196,400. 196,400. So this is what we have. So there now, this one is the one that we are supposed to subtract the accumulated depreciation. Now remember, we're saying cost minus accumulated depreciation, and accumulated depreciation for equipment is this one, 91,200. So we are now saying 91,200. We are now saying cost minus accumulated depreciation. So our cost is this one, 196,400. Then you subtract the accumulated depreciation, which is given is 91,200. Then the answer that we get there, you multiply by 10%. You multiply by 10% the rate that you are given for calculating depreciation for equipment. 10% is 10 over 100, or you can present it as a decimal. You can multiply it as a decimal using 0.01. So there is 0.1 there. If you divide 100 into 10, you get 0.1. So as a decimal, is 0.10. So you can just say 0.10 times this one. And then the answer that you are supposed to get there is 10,520. 10,520. So depreciation now, we are going to add that 800 plus this one. This one is for the equipment that said for the whole year, and the equipment that came along the year was 800. So 800 plus this one plus the figure that we have for vehicles. So here now we are just summarizing on the other section on depreciation. We come now here, then in brackets, now we are saying that 800, and then we add 10,520. This is for equipment, 10,520. 10,520 here. 10,520 there. So we are saying 10,520. And then we add for vehicles. Remember, for vehicles, we got 79,590. So if you add these ones, the total that you are supposed to get for depreciation is 90,910. 90,910. Then we do that. We now add now to get the total. We have now included all expenses. So we can add the total there in this column. We can add the total in that column. So if you add what we are having for the all expenses there, you add there, the total is supposed to come here is the one that is representing distribution, administrative, and other expenses. So when you add there, the total that you're supposed to get there is 1 million. 1 million and 56,450. And we are saying less, so we subtract it from this figure, this one minus this one. Then when you subtract, you are going to get before you get that figure, you also go to you are also supposed to subtract the finance cost there. So we can go down there and try to put that one, that finance cost. We can try to put the finance down. Let's try to see. Right, here. So here it means now we now have the finance cost which is supposed to come here, and then we now also subtract finance cost so that we have the profit for the year now. So what we are going to do then, let's try to see what we have there. So here, what we are saying is that we are going to say less also finance costs. And for that finance cost, it's only interest on loan. And then if you go to the question, we'll see that we are given the interest on loan there. We are given the interest on loan at the beginning of the question there. Let's try to see the interest that we are. See that the interest for the loan, let's try to see. Loan here, we are given it is 32,880. So this is the figure that we are going to put for interest on loan, 32,880. So there, now we have got 32,880. So what does it mean now? We have got 32,880. We are not supposed to put it in this column, but we put it in the last column there because we are subtracting it. We're subtracting it from the figure that we are having there. So we have got 32,880. And then we are also subtracting it. Okay, sorry, there is a mistake there. We are supposed to put it in this column, 32,880. And then if you have got another finance cost, we put it here, then the total now we put in line with this description now. So we are now 32,880. And then we are subtracting, we are saying less here. So we are subtracting there. So now when you subtract from the figures that are having on top there, and that's now when now we can get our profit for the year. So here now we are having a profit for the year. So we are now saying the figure that is on top there, we subtract there, then we get profit for the year here, which is our 1,023,570. So 1,023,570. So what does it mean? It means here the figure that we are having here is now the profit for the year. So this is what we have. This is what we have there. So what does it mean now to get our profit for the year there? To get our profit for the year, what did we do? We said the figure that we are having there. Let's just check the figures. Let's just check the figures that we are having there. These figures that we are having here, we're saying this figure that we are having there, 1,373,900. We subtracted 1,056,000 here for our other expenses. Then we subtract the finance cost. Then we got the figure for profit for the year. So this is what we have, guys. We'll meet again in the next video. Thank you for listening. With that, out.